How do you do? Oh, great. We are now live. I do apologize for that. I don't know what the issue is today with our. Okay. My apologies. Hey, let me just quickly open the chat. Good evening, everybody. Welcome to yet another live trading webinar with your host Isaac Izy, courtesy of Octa. All right, welcome you guys. Hindi only, say no, this is English only, sir. I believe there will be another webinar for Hindi, but today we are speaking English. Welcome everybody. Good evening, good morning, good afternoon from wherever you are in the world. Welcome to yet another live trading session with myself, Isaac Izy, courtesy of Octa. And before we begin today, let me just first start by thanking you again for joining me today. If it is your first time here, welcome. You are welcome. We are happy to have you here. If it's not your first time, again, thank you for joining me again. It means I am doing the right thing, so that's why you are here again, and I'm happy to have you again. And I love you, man. I love you. I just feel like I should tell that to somebody. I love you, man. I love you. I hope you had a great day. Before we begin, we've already lost about 13 minutes. So before I begin, let me just say a disclaimer that any opinion, any news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and do not constitute as investment advice. This is a disclaimer, guys. As I always say, if you want any financial advice or investment advice, make sure that you speak to a regulated entity or a key individual that is regulated by the Financial Service Board, depending on which country that you are in. Whatever financial regulatory board is there, please make sure that the person is regulated by that entity or that company is regulated by the board. Okay. Again, I just want to give out an apology. I do have a bit of an issue. I'm not feeling very well today. I'm feeling a bit nauseous and I have a bit of flu, so do forgive me if I cough throughout the session and if my voice is not as clear as it always is. But nonetheless, you need me, I need you, and we are here. We're gonna continue working nonetheless. No sickness is going to stop us. No sickness formed against us shall prosper. All right. Excuse me. All right, for our first time visitors here today, I just want to tell you that you are welcome home. And by the end of this session, I'm going to give you another promo code that will get you to have your 100% deposit bonus on your first time deposit. So that means if you deposit $5,000, you will be getting another $5,000 as your deposit bonus to increase your profit potential and increase your trading margin. All right, I hope you guys will stay till the end of the session. I have exciting content for you today, fire content. If you were with us last week, I called out a trade. I think it was on Nasdaq or it was on US 30 or on gold, one of the three. I think I called out 2 or 1, but on one of these three or two of these three, it was a massive. Immediately after the session, it went straight into profit. So I hope you guys did take that. I hope you had profitable, like nice pips. It was a sniper entry. So stay tuned. We're gonna call out trades today. I'm gonna give you guys setups. I'm gonna give you guys I'm gonna give you guys a signal. All right, so make sure that we are all eating and we are all profiting. All right. As we are continuing, can I ask you guys to let me know where you guys are tuning in from? Where in the country are you from? Or where in this world are you from? Where Tell me your name, tell me your city, tell me your country, tell me whether you are a beginner or you're an advanced trader, so I can know who I am talking to, so that we get, I make sure that I give you guys the right content, because it will be pointless if you are an advanced trader and I'm telling you about this is what a candlestick does, this is what you look out for in a candlestick and so forth. Or if you're a beginner, I start telling you about dojis, I start telling you about imbalances, fair value gaps, and all of that, and now you don't understand what is this guy talking about. So it's important that you guys let me know that I'm just inviting more people to join us today. It's important that you guys let me know where you guys are tuning in from, so we can all, make sure that we all get what we deserve out of this session, and not only a certain group of people get what they want. So I want to cater for both advanced traders as well as as well as beginner traders. I see Joshi says get well soon. Thank you so much, Joshi. I see we have Akash all the way from India. We have Wicknell from Centurion. We have Salim from Nigeria. We have connected from the Val Triangle. We have one from Pakistan. We have Linda from South Africa, Devon. We have Clayton from South Africa. I said you must tell me your name, tell me the country, tell me the city, and tell me whether you're a beginner or an advanced trader. We have Emmanuel from Nigeria. We have Dot from Nigeria, a beginner. We have Clayton from Devon. Beautiful. Welcome guys. Let us proceed with today's session. For those of you that are joining me, get well easy, thank you so much. I really appreciate it, man. Really appreciate it. You guys must never say I don't love you. Hey, you can even see from my face, I'm sure you can see this guy is really tired. I look homeless. But I'll be fine. If you guys are fine and you don't take this session for granted, then I will be fine. When I rest this evening and I take my medication, I'll be saying, it was all worth it. So don't disappoint me, okay? Make sure that you take everything that I say here serious, and it's gonna help you in your trading. For those of you that who don't know me, my name is Isaac Izy. I'm originally from South Africa. I am a professional Forex trader with a decade of experience. I am the founder of the academy called Flexi Forex College, and we have trained over 5,000 students over the years. We've held over 300 Forex seminars throughout the Southern African region. And our passion is to provide new traders with proven strategies and empower them to succeed. That's what we do. We want people like yourself to become professional traders like myself. Our dream is to have at least one Forex trader in each and every household in South Africa. That is our vision as a company, as an entity, all right, as an individual as well. We have Clayton saying I'm not a beginner, but I'm not as advanced as yet. We have Andrew from Malaysia. It's all love. We have Shrikant from India. Mohammed, love you brother. We have Lord Nelson from all the way from Nigeria, beginner. South Africa, Halabatso in the northwest. Shout out. Before we begin with today's session, I just thought it's important that I repeat these Forex trading tips that you will need. Right, these are my top Forex trading tips that I believe every Forex trader need. This don't only cater to beginners or advanced traders, it caters to all traders. Whether beginners, whether or whether advanced traders, you need these tips in order for you to succeed. All right, number one is no loyalty is a good trait. Make sure that you write this down, frame them, put them on your wall, on your trading room. All right, let me just quickly put my phone on do not disturb so we don't get disturbed. Just give me 1 second so we don't get disturbed while I'm with you guys, so I can give you guys my undivided attention. All right. Alrighty. How does one enroll at Flexi Forex? You can send me a DM and then we'll give you all the details. Alright, let's keep it moving. Number one is no loyalty is a good trait. So in Forex trading, if you are married or you are dating, please understand that you have to be loyal, okay? I'm only speaking in the context of trading. Only in trading you are allowed not to be loyal. And what do I mean by that? I mean, do not be loyal to a setup. Do not be loyal to a signal. Do not be loyal to a currency pair. Right? What most traders do is, if I analyze the market right now and I anticipate a bullish movement, or I anticipate a buy in the market, let's say on Nasdaq, right? But the market now shows me that the market is bearish, the market is selling. But because I've become loyal to the analysis and I have the obsession to want to be right, I still want to force the buy, even though the market is showing me otherwise. Right, so I become loyal to my idea, I become loyal to my setup, and as a result, I will blow my account. Has any of you ever been in that situation where you analyze, you believe that you are right, you enter the trade, the market shows you, it gives you all the signals that, hey, I'm going the opposite direction, but because you want to be right and you are loyal to your trade, you say, no, it will go in my direction, until eventually your account is blown. Has anyone ever been in there? If you have been in there, give me the crying emojis so that you let me know that this is the last time you cry and you will not repeat the same mistake. All right, are we together? Number two is seek quality over quantity. Seek quality over quantity. What do I mean by that? I always say, just because the market is moving doesn't mean that you should be trading. All right. Just because the market is moving doesn't mean that you should be trading. Are we together? Right. So the best thing that you can do for yourself as a trader is to seek quality setups over quantity. You don't have to open 20 trades in a week. You can open 2 or 3 trades in a week, and all those 3 trades are quality setups and they are profitable and they give you high profits. All right. So let's seek quality over quantity. We seek quality over quantity. I see Nelson is crying. I see Risky is crying. Your name is Risky, so I can I can see why you're always taking this risk. I can see why you are here. All right. Seek quality trades over quantity. You don't have to trade every trade. All right. Right, I did that last week. I told you I blew my account on Euro. Exactly. You see, so promise me you will never do that mistake ever again. You will not be loyal to a setup. You will follow what the market tells you. Your job is to react to what the market does, okay? Not to tell the market what it should do. You react to what the market does. And number 2 is you seek quality trades over quantity trades. All right. And then we have, how do we identify our market trends going to change and price ready for change, same like gold price going bottom now pullback? We will get to that. I will show you. Today we're going to discuss some reversals, some things to look at when the market is about to change direction. So stay tuned. I am going to answer that question. All right. Promise me you'll never do that again, Lindy. Promise me you'll never do that. Number 3 is, when you are in doubt, do nothing. And I'm sure all of you have been here, right? You analyze. You're just not too sure. You're not sure if it's gonna buy. You're not sure if it's gonna sell, and you just make an instinct decision. All right, you make a decision based on instinct or based on emotion. You're like, you know what? Even though I'm not sure, I'm just gonna trade. Which links to the previous one. Seek quality over quantity. Right? You need to have rules. Now, number 3 says, when you are in doubt, please do nothing. How many of you have ever done this? You analyze, you're not sure, but either way, you take the trade. And as I would guess, your account was blown or that trade was in a loss, but you were in doubt and you were like, you know what? I know I shouldn't have taken that trade because I was not too sure. If you've been there, please give me some crying emojis, because I want you to cry for the last time and you never repeat this ever again. All right. Number 4 is never hope for an outcome. All right. You trading, you never hope for an outcome. All right. What do I mean by that? What do I mean? Easy. What do you mean? I'm hoping to make money. I'm hoping to be profitable. I'm hoping. You get what I'm saying? But we never hope for outcomes in the market. All right. This is a business of speculation. It's a business of probabilities, not certainties. All right. And do not come into the market with your problems. You don't attach your problems or your bills to the market. I hope I make this much so that I can be able to pay this bill. That's where a lot of traders lose it. How many of you have been in this situation where you come into the market, you have a bill that is on your neck and you attach it to your trading and you end up making mistake and even lose the little money that you had that you wanted to double up in within one day? How many of you have been there? I know a lot of us have been there. So please, let us stay away from hoping for outcomes in the market. Let us always make sober decisions and understand this is a business of probabilities, not certainties. We speculate. You take what the market gives you. You don't dictate what you should get into the markets. All right. Are we together? Are you guys with me? If you are with me, send me some fire emojis. Let's stop a bit with the crying, because you are now making me emotional and I don't want to be emotional. Okay? Right. I'm a victim. We all are. So that's why I put these things here. That's why I said frame them, so you are always aware of what is happening to you, so you can make a sound and a sober decision. All right. Number 5 is the market is always neutral. All right. The market is always neutral. Now, I've heard a lot of people say things like this: the market maker spiked me. The market makers stopped hunting me. The market makers manipulated me. All right. Or the broker The market is always neutral. The market is going to do what the market is going to do. Your job, remember, as I said, is to react to what the market does. All right. So always remember that. The market is always neutral. It will take the direction it needs to take. It's nothing personal against you. Your job is to be patient and follow what the market does instead of trying to be ahead of the market. Are we together? If you are with me, bring in some fire emojis and some dollar emojis, because we're now getting to the money, baby. We're now getting to the money. All right. Number 6 is take responsibility for everything, which is linked to the previous one. As I said, the market is always neutral. So that means you are responsible for your outcomes as well. All right. You take responsibility. The very same way you take a screenshot of your profits and your sniper entries, it's the very same way you must take the screenshot and responsibility of the of the losses as well. So you take responsibility of every outcome that comes out of the market. Are we together? Are you with me? Because if you only take responsibility for your profits, but you don't take responsibility for your losses, what's gonna happen is you're gonna subconsciously tell yourself that you have perfected the craft, that you don't need to learn anything else, that whenever things go wrong, it's either it's the market or it's the broker, but it's never your fault. Therefore, you never take responsibility to improve and refine your skill. So that's why we take responsibility of every outcome in the market. The market hits a stop loss, your fault. The market hits take profit, your fault. The market is consolidating, you're the one that pressed that buy or sell button. The market kicked you out and went into your direction, you were the one that was not patient enough. Or, you just have to take that responsibility. You take responsibility. Say, please, technical ideas on the chat. Please be patient. Please be patient. We're going to get to that. This is what I mean when I say, if you're not a patient person, you won't make it into trading. If I were you, I'd forget about trading right now, because you can't even be patient on the things that are most important. You just want ideas on the charts. Please Please don't come here and dictate what we must do. You listen to what we want to do, or you just wait until we get to the charts. Okay, there are people who need this. All right, there are people who, if you were a professional, you obviously be trading by yourself. You are here because you need to learn, and I tell you what I know is important and will make you a professional trader. So please be patient. Patience is a virtue for a professional forex trader. Exercise it. Okay, please exercise patience. All right, are we together? Thank you so much. All right, number 1, 2, 3, 4, 5, 6, 7. Always let the market make the first move. Always let the market make the first move. As I said, our job is to react to what the market does. Our job is to not to dictate what the market should do. We wait for the market to make the first move, and then we go on to. All right, are we together? We follow what the market is doing. All right, apologies accepted by VSK007. Apologies accepted. All right, always let the market make the first move. You always let the market make the first move, period. You don't dictate what the market should do. You let it make the first move, let it follow your rules, and then you execute your trade. All right. And lastly is find a trading style that best suits your personality. Find a trading style that best suits your personality. What do I mean by that? There are different ways to trade. There's scalping, there's day trading, there's swing trading, there's position trading. All right. Now, if you are an impatient person like VSK007, right? You just can't wait. Right? You just want to get to it. You can't wait. You have no business being a swing trader. You have no business being a position trader. What you should be doing is be a scalper. Why? Because you don't have the patience. You want to jump in and out of the market. And it's okay. Right? That's why you need to find a trading style that best suits your own personality, so you don't get frustrated. Because now Isaac is a swing trader. You learn from Isaac, and then you say no, but hey, I can't wait 8 hours to get a confirmation. That's right. Trade on smaller time frames. Or like us, you're like myself, you don't want to be looking at the charts 24/7, scalping, going in and out. You want to take one trade and let it swing and give you the profits. Then you should be a swing trader, right? Because you have the patience. Understand your risk tolerance, all right? Write down the things that how you react to certain outcomes. If you know that when your losses start going over 10%, you start sweating in your hands. Write that down. No, it's your personality. So don't ever put yourself in a position where your losses go over 10%. Some of you close profits too early. Okay, why? Because you have the fear of missing out. So that means you can't hold a trade for too long. What you can do is at least increase a bit of your risk so you can target small. I know a lot of people that are so accurate with they are so precise with their analysis, but they never just hold the trade. They will take a 10 pip or 20 pips, even though that setup was gonna go for 100 pips or 200 pips. But again, it's okay. Increase a bit of your lot size, take those 20 pips, and you still get the money. Remember, as long as the outcome is the income. All right, as long as the outcome is the income, that's the most important thing. So this is the most important one. Find a trading style that best suits your personality, or else forex trading will frustrate you. All right, let's get to it. So today we're going to be discussing understanding chart patterns. We're going to discuss mainly reversal patterns today. I saw someone say, how do I know that the market is going to turn and change direction? All right. Can you teach us any good strategy for scalping? I'm going to show you right now. The strategy I will teach you today is both for swing and for scalping. I will show you when we get to it. So firstly, I want to show you understanding chart patterns. All right, understand what to look out for before the market changes direction. And we're gonna discuss I will leave out trend lines today. I will leave them out because of time, but we will get to it. And then we're gonna discuss the strategy, using this strategy in combination with the trend lines, in combination with the reversal chart patterns, how to look out for a trend reversal and how to catch it when it starts all the way to the end. We're gonna get to that. Let's go. VSK 007, are you still here? We are getting to the juice now, and then I'm gonna show you the trade ideas. All right. All right. Understanding chart patterns. Chart formations will greatly help us spot conditions where the price is ready to break out in a certain direction. They can also indicate whether the price will continue in its current direction or it will reverse. All right. In a nutshell, chart patterns help you answer 3 questions. How do I find potential entries in a rising or a falling trend? Number 2 is, how can chart patterns offer potential entry signals? And number 3, how do I know when to get out, either to take profits or to cut my losses short? All right. Exit strategy. A lot of people know how to execute, but they don't know how to exit. When should you exit? You can use chart patterns to alert you, to give you an edge of when you can exit the market. Let's get right into it. I like your accent, man. Thank you, Akash. I love your accent too. I can read this and I just know that you have a lovely accent as well. All right. Let's talk reversal patterns. Reversal patterns are those chart formations that signal the ongoing trend is about to change. All right. If a reversal chart pattern forms during an uptrend, it's a hint that the trend will start going down. All right. And if a reversal chart pattern is seen during a downtrend, it also suggests that there will be a move to the upside. These are some of the things you need to look at for you to have an edge, for at least to read the market and know what is about to happen in the market. Remember, these are potentials. It's not a guarantee that when you see these things they will happen. It's just it's a hint. Sometimes that's why there are rules that needs to be followed for that certain pattern to be valid. Okay, let's pick the most common ones is a double top, double bottom, head and shoulder, and inverse head and shoulder. Let's talk double tops. Now, double tops are reversal chart patterns that are found in an uptrend. Okay. Sorry about that. Please excuse me for that. I am sorry about that, guys. I did apologize earlier. Okay, let's run it up. Let's run it up. Double tops. All right. A lot of people ignore these things. You know, people love to be sophisticated. They love to complicate the most simplest things. All right. And it's the most simplest things that make, Albert Einstein says, what did he say? Simplicity is the ultimate sophistication. And the market makers know this. People like to complicate things. So they keep the answers in the most simple things. The answers are hidden in the most simple things, not in the complicated things. Once you understand that in trading, trust me, your trading life will never be the same again. Once you understand that if I keep it simple, I will be profitable. Say it with me. Write it in the comment section. If I keep it simple, I will be profitable. Please write it. If I keep it simple, I will be profitable. Are you okay, sir? I'm all right. I'm just a bit nauseous and a bit sick, but I'm okay. We'll be able to do this today. All right. As I said, double tops. So we're gonna discuss a double top. I'm trying to think of the easiest way to explain it to you. Think of it as an M formation. You see the letter M, right? That's what a double top is. So what happens is it happens in an uptrend. While the market is going up, right, it goes in an uptrend and then it reaches what we call a resistance area. It fails to break it, it hits it, comes back down, creates what we call a neckline. Do you see that? We call that a neckline, and then it goes up again to the same area or zone of resistance, and it comes back again. Now it doesn't only get here and it's it's what is this thing called? It doesn't only get here and it's you now go into the trade. No. We need to wait for the market to break the neckline. Do you see the neckline? Do you see the neckline? The market breaks the neckline. All right. The market breaks the neckline, and once it breaks the neckline, it's a confirmation that the direction of the trend is changing, and then you can enter your trade. All right, most of the time it will break the neckline, comes and retest the neckline. It means it will come back to that price where it broke to test that neckline, and then that's when you can execute your trade. As we can see over here, the market went up, created a neckline, went up again to create the second top, and then broke the neckline, and then it shot all the way down. All right, keep it simple, and I'm gonna show you this in a chart. I think what I should do is let me just open this right now so you can believe me when I say if I keep it simple, I will be profitable. All right, let's quickly go into the charts right now. Let me just quickly go on a 1 hour time frame. If you are in our Telegram channel, you should have seen, no, it's the paid Telegram channel, apologies. We sent that buy on Nasdaq. Let me show you guys so you can see the beauty of that trade and how we took it. And this is what I'm going to be teaching you guys. All right, this is what I'm going to be teaching you guys. I'm not sure if you guys can see the trade over there. All right, I'm sure you can see we are running $2,000 over there. All right, we are running $2,000 over there just of this trade. If you can see the entry where we took it right there, this is where we took the entry. Around this area here, we took the entry around that area there. As you guys can see over there, we took it right here, and we are now about 200 pips. We are about 200 pips in profit. We are running 2,300 US dollars in profit. All right, now that was a beautiful trade. That was a beautiful trade, which is why you need to keep it simple. Which is why you need to keep it simple so you can be profitable. As I said, I'm going to show you a double top so you can understand an information, so you can understand what I mean by that. All right, I just want to look for a simple one where it makes sense. There we go. All right, here's actually a what we call a triple top. 1, 2, 3 tops, broke it, and then went all the way down. I'm just looking for another one. Okay, let's check US 13. What time frame do we use for analysis? Literally on every time frame. Literally on every time frame it works. Like I said, it depends on what type of a trader you are. You know, obviously the higher the time frame, the more significant it is. The higher the time frame, the more significant it is. All right, as we can see over there, we had an uptrend, reach a resistance, we created the neckline over there. All right, the market went all the way there. There's too much noise because of the time frame. Eventually, when we broke the side, we played around this area, but eventually what happened, we went all the way down. You see, we played around that neckline area for quite a while, but I looked for one which is more. We played around this area for quite a while, and then eventually we went down. But even before we went down, you see what happened over there. We had the market come there. Let me just remove this triangle over there. And then we had the market come down to create a neckline. And the market go up again to create the second top. You see the information, and then eventually we broke to the downside and the market shot all the way down. Do you guys see that? Do you guys see that? Does it make sense? Does it make sense? Please let me know if you understand what I mean by that. We had a top over there, and then we had another top over there, and we had our neckline being broken, and the market showed. Which time frame can I find this candlesticks? On every time frame. This is on 1 hour time frame. Let me go on a M1 time frame so you can see it's found on every time frame, just depending on what type of a trader you are. All right, as we can see there, we have an M formation and the market shot down a bit. Here we have a W formation, the market shot up. All right, I'm going to show you guys the W formation now. All right, there's another W formation. W formation is basically the opposite of a M formation. That's a double bottom, that's a double top. All right, do you guys see that? It works on all time frames. All right, it just depends on what type of a trader you are. Look at that, we have an M over there. This is on a 1 hour 1 minute time frame. All right, where do we put our entry? I'm gonna tell you, we're gonna get to it. 1 2, then boom, the market shot. All right, do you guys see that? 1 2, the market shot all the way up. 1 2, the market shot up. You guys see that? You see the beauty of 1 2, the market shot all the way down. We're gonna get to the entries. All right, that's where the beauty of the strategy comes in, using these things in combination with other things so you can get a clear, a confluence, so you can get a clear entry in the market. Let's quickly go to the double bottoms. The double bottoms is now the opposite of what a double top is, right? It happens in a downtrend. The market has been trending down. It means the market was selling. We get to a support area. The market comes to the support area, fails to break it. It gives us our first bottom. It goes up, it creates a neckline, comes back down to the same zone, creates a second bottom, then it comes back up, it breaks the neckline. Now when it breaks the neckline, it's a confirmation. What you want is, you want the candlestick to close above the neckline. All right, you want the candlestick that breaks to close above the neckline. Once it closes above the neckline, it's a confirmation that market is changing direction. All right, in more complex the more sophisticated concepts like the smart money concept, they'll start talking about change of character or of break of structure. All right, so the market breaks structure there to indicate that it's going to create another it's going to create another high, which is higher than the previous neckline, and then that's where we take our entries. You take our entries and goes all the way up. All right, but then I'm gonna show you what else to look out for when you're looking for entries. Let's quickly go. Okay, I showed you inverse head, I showed you double bottoms, so now let's go to head and shoulders. All right, I showed you double bottoms on the charts. All right, I did that, I believe so, when I was showing you the double tops. How to mark the neckline? Let me just quickly go into it. All right, let's quickly go into it. Let me open the chart. All right, so let's see, let's go on a higher time frame because it will be more defined, so it's easier for you to tell where you are. All right, I was gonna look for a nice. So again, just while we're on that, you see why it's important that you must wait for the neckline to see what happened here. Where the market went up there, came back here, created a neckline, came back there, but it failed to break, and then it shot all the way up. So that's why it's important that you must wait for the market to break the neckline. Market must break the neckline below, and then it starts going down. Do you guys understand it? You see how easy this thing is. That's why it's important to wait. That's why it's important to have patience. All right, patience is a virtue, because you will is neckline known as a support? Exactly, it will be known as a support or a resistance, depending if whether it's a depending on whether it's a double top or a double bottom. All right, so okay, for instance, here's our neckline here. We had the market trending down, went up, created that high there. All right, came down again, create a second bottom. Now we see the market broke to the upside, came to test that, and then shot all the way up. Now this is where your entry should have been. All right, exactly here. This is where your entry, this is where our neckline was. The market broke the neckline, came back to test it. As soon as it tested it, what happened? See how many pips are that? See how many pips are that? Do you guys see that? See how many pips are that? Man. Get well soon. Thank you so much. Right. So that's how you identify the neckline. Literally just a support or resistance. All right. That is closer. That is closer to the first top or the first bottom. All right. We are running out of time. Head and shoulder. Let's discuss head and shoulder. Head and shoulder is a more stronger. It's the one that is more stronger than the double top and the double bottom. It's stronger. Once you see that, it's the chances of the trend reversing are higher than when you see a double bottom or a double top. Right. So head and shoulder, literally, it looks like a head and shoulder. You have a head and you have two shoulders. All right. So as you can see here, head and shoulder happens in an uptrend. All right. We are in an uptrend. The market goes up. It creates a top or a shoulder. It comes back down to create a neckline, which is a support area. It goes up and then it breaks the previous shoulder. It creates what we call a head, but it comes back down to around the same area. All right. Goes down to the same area. All right. Which is the support area, which is our neckline. Then it goes up, but it doesn't go higher than the previous head. Doesn't go higher than the previous high. All right. It's more or less the same area as the previous shoulder to create another shoulder. That's what we call the right shoulder. Once you see that, get ready. Get ready to take out your guns because you're about to make a killing in the market. You feel me? All right. So now what do we wait for? We wait for this to play out, but we don't enter until there is a break. All right. All right. I'll get to. So we break the neckline. Once the neckline is broken and tested, all right, we now take our sell entries, because now the market is what? Showing us that it's changing direction. Now, Hang says, let's say for inverted head and shoulder, if it broke the neckline, does it usually go up to the next resistance, which I assume that's where we take profit? Exactly. But over and above that, what I'm going to teach you after this, all right, which is the gist of the strategy. Now, this is where you're going to know where to take your take profits and where to take your where to put your stop losses. I'm going to give you all of that in a moment, so stay tuned. So we're going to use all of that in combination with my secret weapon. For those of you that have been here, you already know my secret weapon. The power to sniper entries. The power to sniper entries. Give me some dollar emojis in the comment section to let me know that you are ready for this money. Give me some dollar emojis to let me know you are ready in this money. So we understand head and shoulder. Head and shoulder. Literally, the market is in an uptrend, creates a shoulder, creates a head, creates another shoulder, breaks the support area, and then kaboom. All right. Natural support and resistance yearly, 6 month, quarterly, monthly, weekly highs and lows. How to use. All right. I'm gonna show you. Just relax. I'm gonna show you how to spot them. The best ones to use. Like I said, there's a cherry on top, right? I'm just giving you, the suspense. I'm giving you the suspense, and then I unveil it to you. All right. Once I unveil it, I want you to say, oh, I want you to get that aha moment. Aha. That it's so easy. That's what I want you to say. All right. And then we have an inverse head and shoulder, which is basically the opposite of what we just discussed right now. It happens in a downtrend. The market hits a support area, goes up to a resistance area, fails to break it, comes down, breaks the support, goes to another support, goes up again, fails to break the resistance area, comes back down to the support, more or less the same support zone as the left shoulder, creates a right shoulder. Now we wait for it to break the neckline. Once the neckline is broken, we take our buys, because the market is telling us that now they are going to the upside. They are changing direction. As we can see, the market broke the neckline, and what happened? Kaboom! The market shot all the way up to the upside. All right, I said we're gonna skip trend lines. All right, now let's quickly go to the chart so I can show you something. All right, the gist of it. So I want you to take out your pen and paper. All right, take out your pen and paper, and I want you to write what we call, write the heading there, round numbers or RB numbers. All right, round numbers or RB numbers, round numbers or RB numbers. So you decide what you want to call it, RB or round numbers. All right, to think of it, if you look at the right side here, we have what we call the price. Right, on the downside here we have what we call time or date, time and date. Here we have price. All right, the most important thing to look at is the price. Even if you go into the market or to go into the shops or to the mall, you may look at the thing that you want to buy, but you end up looking at the price. So I want you to think like that, looking at the price. Man, that Nasdaq trade was a beautiful trade, man. Beautiful trade. Let me see how much we're running on now. Beautiful trade, man. Beautiful trade. My God. We are now on $2,500. We are now on $2,500. Beautiful trade. Beautiful executed trade. If you guys can see the entry was there, and another entry was there. Beautifully done. All right, which is why you need to pay attention. This is why you need to pay attention to what I'm about to show you right now. All right, round numbers. All right, think of round numbers as your double zeros, your zeros, triple zeros, your zeros, double zeros, and your triple zeros. All right, can you guys hear me? Zeros, double zeros, and your triple zeros. So your tens, 10, 20, 30, 40, 50, 60, 70, 80, 90. Your hundreds, 100, 200, 300, 400, 500, 600, 700, 800, 900. And then your thousands, 2,000, 3,000, 4,000, and so forth, based on the price. Now we are looking at Nasdaq. We can see Nasdaq is on 15,055. All right, so what would be our round numbers here? And this, you can use them as your support and resistance. All right, our nearest round number here will be, you trade alone. Please make sure that you are part of the Signal group. Please make sure that you are part of the Telegram group. Those trades have been given in the Telegram channel, my friend. All right, they have been given in the Telegram channel. All right, so our next round number here will be 15,100 at the top of the price. All right, 15,100. Do you see where it was? All right, then we will go to 15,000. Right, this is our next triple zero. This is our triple zero. Can you guys understand? You see that 15,000, 15,100, and then we're gonna go to 14,900. All right, 14,900. All right, 14,900. Do you guys see that? Do you already see how important these prices are? Say video resolution quality, please increase. I think because of load shedding, I think we have a bit of an issue with the Wi-Fi. We have load shedding currently. All right, 15,700. Right, 15,600. I want you guys to pay attention to these numbers. Pay attention to what is happening to these numbers. All right, pay attention to what is happening to these round numbers. All right, 15,500, 14,500. 14,500. All right, now let's just quickly look. See what happened here. We have an inverse head and shoulder. Do you guys see that? Market has been trending down. Let me just quickly put a triangle so we can focus on this. Market was trending down. Let's look at the zone over there. Who changed my colors here? Yeah, man. What? Let's quickly do that. I don't know what you mean, man. There's really nothing I can do with that. Is everybody else quality, the resolution of the quality low? Because I don't, from my side, I'm guessing the issue is the network. But if the network is terrible, there's really nothing I can do right now. All right. Now, if you are using this strategy, all right, market has been trending down. We see that the market goes to a support and resistance area, which is our support. All right, market has been trending now, and then what do we see? We see an inverse head and shoulder. The market came to our 14,500 price zone. It went up again, came back to 14,600 zone, came down again over here, rejected, and came back again to that to that 14,600 price. Now we see we have a shoulder, we have a head. The market came back down again to 14,500. All right, came back and it broke that. The screen quality is good. I'm guessing VSK, then the issue is your network on the side, but please don't be alarmed. This will be saved. This will be saved on the Octa YouTube channel, so you can always go back and rewatch it again. All right, as you can see, the market broke this area here. So now if you're using the head and shoulder pattern, plus understanding that once the market breaks the round number, it will go to the next one. We can see that the market broke here. All right, also giving you a confirmation that the market is now changing direction. And what happened? The market shot all the way up. What did it do after it broke this? Where did it go? It went to our 14,700. From our 14,700 it broke, retested, went to our 14,800. Immediately 14,800 we went to 14,900. We came back to retest, to retrace to 14,700. What did we do? We shot all the way to 14,800 with the gap. What are the odds that the gap happens exactly on the price that I've put, the double zeros? All right, what happened there? The market played around a bit, came back to retest this area, went all the way to 14,900, came back down again. You see, and we see the market rotating back to our initial entry. All right, you guys see that? Now, if you were here last week, you also know that this is another reversal pattern over here. Let's go to a triangle. This is another reversal pattern over there. All right, we can see that it happened exactly at our 14,500 price. The market shot all the way up. All right, so now today, why did we take the buy? All right, so obviously we already had a confirmation that the market has changed direction. All right, the market has changed direction. Now, if you go on a higher time frame, you will notice we have what? A double top. A double bottom. You guys see that? Market has been going down, created a bottom, went all the way up, created the neckline, came back up, down to create another bottom. Market shot all the way up. We broke the neckline. All right, we see that. Then the market came to test the neckline. All right, we were in the zone of the 14,800. If you look at the price that we took it at 1850. Remember I said what you call 50s, 10, 20s, your single zeros. We took our price, our entry at 14,850. Exactly right there. Look at what the market did. All right, once it did that, shot all the way up. This is the result that you see right now. So we have a combination of what? The double bottom that I showed you guys about, in conjunction with what? the round numbers, right? Understanding market structure. The market has given us an indication that it's reversing. It broke the neckline, waited for the test of the neckline, and we shot all the way up. Now, if you were here last week, you will notice that I gave you guys a buy around this area as well. All right, you guys understand that I gave you a buy around this area, and the market shot up, and we continue shooting up again. So what's going to happen right now, the market is going to get to about 15,100, maybe retraces a bit to maybe to 14,900 or 15,000, and then we continue going up again. I would say for a safer entry, the market is going to do this break here, and then it's going to come back again to this price, all right, and then we can shoot all the way up unless we get a rejection here, a reversal. All right, we get a reversal around this price, then we will know that the market will give us a reversal and then maybe continue going down to maybe about the 14,800 price, and then we go up again. Do you guys understand that? All right. VSK, I'm guessing it's the issue is your network probably. Like I said, relax, you can go back and rewatch it again, the recorded one. It will probably be in good quality. All right, maybe because everybody else, they say the quality is good. Even on my side, the quality is good. All right, it's probably a network issue. You know, relax, you can go rewatch it again. Immediately when we end this session, it will be saved, and then you can go and watch it again. So as I said, this is the scenario that we are looking at. The market is gonna get here, reject this price over here at 15,100. If you're a scalper, you can take a sell up to about 15,000. Okay, up to about 15,000. If it breaks the 15,000 area, it will come to 14,900, and then we can continue taking our buys to the upside. Are we together? Do you guys understand that? Let's quickly look at US30. Let's quickly look at US30. I'm gonna do the same thing. Our next, oh man, I just love how it's pushing up. I love how it's pushing up. Let's look at 33,600. 33,600. All right, look at that. Look at that. At that price, without even me looking at the chart, at what the chart is doing, just by placing my lines using price, right? 33,500. Let's look at that. Oh, beautiful. Look at that. Look at that. Look at that. Amazing, man. 33,400. 33,400. Right, 33, 300, 33, 300. So we're gonna look now what to look out for on US30. All right, 33, 100. But relax. I'm gonna give you, if you guys make sure that you are in the Telegram channel, the signals are sent in the Telegram channel. You won't miss out on any signal that I take. I will send it in there as well. 33,200. All right. 33,000. Let's stop at 33,000. All right. Stop at 33,000. All right. So now, what do we see here? Let's quickly go on a higher time frame. Let's see what happens over there. Exactly. Kaboom. Right. We have let's go on we have the market giving us a bottom over there. All right. We have the market giving us another bottom over here after a smaller period of consolidation. All right. And what did the market do? The market broke the neckline around this area, went all the way up, came to retest the neckline, right? Came to retest the neckline around this zone, and what happened? Kaboom. Shot all the way up. Isn't that beautiful? Isn't that beautifully done? Isn't that beautifully done? Right? And look at where the market reverses. Look at where you could be taking your entries. Right. Right at the right at the double zeros and your triple zeros. All right, guys, because of time, we were supposed to end at 8. I see we are already about 11 minutes overboard, so that gives us an hour. So these are the what you should be looking out for today, all right, and tomorrow, all right. And like I said, I will send a signal. So on US30, we're gonna look for we have 700. We're gonna look for sells, all right, short-term sells around that price over there. As you can see, this is a strong zone over here. We're gonna look for a rejection around this price all the way to price of about 33,400, all right, 33,400. This is what I'm anticipating right now, all right. So this is what might happen on the way to that area over there, and then we continue going up unless we get a rejection over here to the a reversal over here to the downside and continue breaking all the way down. Or the market, the momentum is quite strong, the buy momentum is quite strong, the market will do, it will get to the around those areas over there, come back here and continue shooting up before we get a major retracement. So this is what we're looking out for. All right, this is what we look out for in there on US30 as well as Nasdaq. So these are the possibilities that we're looking out for on US30 and Nasdaq. All right, we are currently bullish. All right, we are currently bullish on both of them. All right, we are currently bullish on both of them. All right, and should anything, we should look out for what? We should look out for the reversal. We should look out for those reversal patterns, and then we take our entries over there. So as I said, make sure that you are in the Telegram channel. The link is somewhere in the chat, so make sure that you join that, and you will receive what you call, you will receive the signals in there. Okay, so yes, that's it from me, guys. I think I've given you my all for today, even though it's trading me, but it's been a beautiful night. You guys were engaging. I love you guys so much. If there is any questions, can I please ask them? Send your Telegram link. It's somewhere in the chat, so please make sure that you there is somewhere in the link there, somewhere in the chats there, you can get that link, and make sure that you do join. All right, and yeah, that's it from me, guys. You guys have a beautiful evening. You guys have a blessed evening. It's time for me to go home, take my medication, and rest. All right, I will see you guys. Remember, we are not done. I'll see you guys next week, Monday, 7 p.m. Central African time. Make sure that you set your alarms. Next week, I'm going to dive deeper into the RB numbers, the significance of the round numbers. Why are they important, and what to look out for over and above the reversal patterns? How do you know that it's going to, where it's going to retrace, and where it's going to turn, where it's going to reverse? All of that, we're going to get into it next week. Next week, Monday, 7 p.m. Central African time. So make sure that you don't miss it. All right. So round numbers combined with natural support and resistance. It is, you can use them as support and resistance, because this is a resistance area, right? You can see it's a resistance area. This is a resistance. So instead of just putting your line over there as a resistance, just use the numbers instead of the normal support. Just go to 800. Let's go to 800. All right, you use that as your resistance area, and go to 900. Go to 900. All right, that is what your support and resistance area is, using price. Why? Look at that. Look at that. What are the chances that right there on 33,900, that's where exactly it turned. If you knew what to look out for, that's where you would have taken your entries right there. You would have taken your entries at 33,900 for sales if you knew what to look out for. You see why it's important to use this. Gold analysis. Ah, man. Can I send the gold analysis in the Telegram channel, please? Can I do that? Can I do that? I sent a buy last week and it's been shooting up. I think we were on take profit 3 today, if I'm not mistaken. Yes. All right. But yeah, guys, that's it from me. Let's have a beautiful one. Please, like I said, next week, don't miss out. Next week, we're gonna be here next week, Monday, same time, 7 p.m. Central African time, and I'm gonna dive deeper into these things so you can understand why do I emphasize on using these round numbers. All right, and confluence with other concepts. Trust me, this is all you need. This is all you need. This is the holy grail that you've been waiting for. All right. Okay, guys, that's it from me, guys. You guys have a good one. Peace out. And I'm out. Remember, I love you guys so much. God bless you. You guys have a profitable week. No stop loss week. Let's dedicate to this week. Let's dedicate this week to no stop loss week. All right, we dedicated to no stop loss week. Can you guys promise me that we're not hitting stop loss this week? From today up until Friday, no stop loss. It's gonna be an amazing week. It's gonna be a profitable week. So I wish you guys all the best. I love you guys so much. God loves you. Jesus loves you. Have a beautiful night further. May your families be blessed as well. Cheers, guys. I'm out.